Welcome to the Sykes & Company PA video blog.
It provides a whole host of opportunities to accelerate depreciation on the expensing side without getting into a lot of the details on this very short video. But suffice it to say, with proper planning, any fixed assets that are purchased can be written off pretty much in their entirety. It also allows for potentially those pharmacies that have been properly recording their income on an accrual basis to switch to cash basis, which is a completely different type of accounting that a pharmacy can utilize under the present standards, the present IRS rules and regulations. If the entity has $25 million in income or less, and that includes any control group of entities that a pharmacy may own. An example, a pharmacy may have 2 or 3 or 4 entities, and if they're combined, and if they're owned by the same group of people or the same person, if that's over $25 million, then the accrual to cash cannot occur. But frankly, the hidden situation this year is going to be that accrual to cash possibility that will allow for a one-time adjustment. In most cases to occur, that'll be massive. However, if the basis of the shareholders, and again, assuming a pass-through entity like an S-corp, doesn't allow for those losses to occur, then those losses will have to be carried forward in what we call a net operating loss. Those net operating losses cannot, under current law, be carried back like prior law. Under prior law, you can carry it back 2 years. Now you have to carry it forward, and only 80% of that is carried forward. Also, the other item that many people have heard a lot about is this, what's referred to as Code Section 199 Cap A, which is the qualified business income deduction, which is a 20% deduction. If you go from accrual to cash deduction, most likely that will impact that particular deduction for the year. Without getting into the details of Code Section 199A, I would just refer you to our some webinars we've done that are on our website just on this topic, where we have covered this in detail. But just suffice it to say that there's never been since the 1980s, when the last major tax changes came about during the Reagan era, as many opportunities for planning on a positive basis for pharmacies than there will be this particular year. Tremendous options that you have. It requires you to have numbers so you know exactly where you are, because if you don't know where you are to do this planning, then waiting for year end to occur sometimes will cause you a headache, to put it mildly. But there's a lot of opportunities to mitigate your taxable income, reduce your taxation, properly plan in this tax year of 2018 without question. And these changes go forward until 2025 unless and when they're changed by Congress further. Well, you need to understand exactly where your pharmacy stands. And if you don't have your balance sheet and your P&L tied in with your third-party receivables reconciled, with your inventory, with payables, with your notes, with depreciation, with amortization if it applies, and depreciation, these kinds of things that you typically would think in some cases only year in, if these things are not in place during the course of the year, and they should be monthly adjustments that you're making, then how do you know where you stand, and how do you know what decisions you can make prior to get to year end? So that's what I refer to as having your fundamental accounting numbers in place. If you don't have those in place, you're going to be very limited as to what. Expensing is very broad. So essentially any and all fixed assets that you're buying, certain leasehold improvements that you're making, any improvements that you're making inside of properties, and that actually can maybe go back and include some improvements that you've made in prior years where this was not handled right, can be expensed on a very aggressive basis if properly planned, if properly dealt with. So there's just more opportunities this year to expense fixed assets, capital improvements, and things of that nature than ever before, again, properly planned. If the pharmacist understands where they are in the course of this calendar year, this is 2018, and has projected what their income is going to be for the remainder of the year, and sees that some of these things that we're talking about here are not going to provide all the benefit that they're going to need, then absolutely they should be considering putting these assets in use. And of course, the main thing is you got to have these assets in use on or before the end of the year. That doesn't mean on order. It means in use. So if they're robotic equipment or script management systems, which a lot of times are large dollar items, then you need to be filling scripts with those items prior to December 31st if you're calendar year.
Thank you for watching. If you enjoyed the video,